Hello, people. Welcome to part 4 of CA Foundation Examination November 2020 accounts, as in principles and practice of accounting paper discussion. So far in this series of videos, we've done question number 1, 2, 3, 4, 5, and 6 is pending. Not a very lengthy one, but come on, let's quickly finish it. So here we are. This is our paper. We had done till question number 4. Let me just scroll down till there. So this is the fourth one, the partnership wala question, followed by the question on NPO. We're done with both. So now we'll start with question number 5. Yes, here we are. Question number 5, that is applied laboratories were unable to. Okay, before I start with question number 5, I've been getting quite a few messages even in the comment section as well as on personal messages asking me to do a quick revision of entire CA Foundation account syllabus for your November examination. Your request has been heard. I will do a live session covering the entire syllabus, a very quick one and comprehensive one. Would be doing that. If in case you need any other topic, quick recap, or any other topic wherein you have too many doubts or any other question in detail, please let me know, drop a message, and I'll definitely do a video on that topic or that question at any level of your examination. Yeah, come on, let's get started. Question number 5A. Messrs. Applied Laboratories were unable to agree their trial balance as on 31st of March 2020. Maybe because they have few errors in it. Okay. And have raised the suspense account for the difference. Pretty obviously, whenever we prepare trial balance, and if the trial balance doesn't tally, we can't keep finding the reason for difference and then postpone our preparation of final accounts. What do? We transfer the balance to suspense account, close our trial balance, also prepare final accounts. At a later stage, when we basically identify what is the reason for difference and the error, we'll rectify it using the suspense account if it is a one-sided error. Perfect. So what do they want us to do? Next year, the following errors were discovered. So these errors are discovered in the next year, subsequent year. So these are errors identified after final accounts. These are errors identified after final accounts. It is stage 3. How exactly is stage 3 any different? The reason why stage 3 is to be seen very peculiarly or differently is in the rectification entry that we pass. I repeat, in the rectification entry that we pass, we cannot be using the items that will affect profit or loss account. We cannot be using the items that will affect profit or loss account. For instance, we cannot be using purchase account, sales account, purchase return account, sales return account, any other expense or income accounts. So how do we rectify? We would have to rectify by replacing such nominal accounts or by replacing such accounts affecting profit or loss by P&L adjustment account. So in a rectification entry, if I have to debit purchase account, I'll replace it with P&L adjustment account. If I have to credit sales account, I'll replace it with P&L adjustment. If I have to debit credit any expenditure income like rent, interest, or any other item, I would replace it with P&L adjustment account because these are prior period items. You would read it in detail in accounting standard 5, but in your inter, but it will tell you right now, it is like an error of previous year affecting current year. An error that has arisen in the previous year, which is affecting the current year financial statements. That, my friends, is a prior period item. Perfect. Yes, let us start writing solutions. So before that, do you want me to read the last line of the question? What does it say? You are required to pass journal entries to rectify the above mistakes. Okay, we'll do journal entries. So we would have to be doing journal entries. What I'll do is, you remember our problem from yesterday? Yeah, that in the books of Suresh problem. I'll copy the format from there and delete the data. So I'll have a ready-made format for my journal entries. So we're doing question number 5A. We're doing in the books of Messrs. Applied Laboratories. I will clear all of this so that we can freshly type the amounts and also read the journal entries freshly. Just the format would remain. Yeah, I told you Just the format would remain. Our date column will become small. Ledger folio can also be kept very small. Debit amount and credit amount columns. Yes, come on. Let us start with the rectification entries. First one, repairs made during the year were wrongly debited to building account. It was wrongly debited to building account. When it was wrongly debited to building account, it was mistake. They are only taking wrongly debit. Such wrong debit has to be compensated by credit now. So what is it that I should do? I should credit my building account. So I'll write here to building account. Done. So building account was not supposed to be debited, wrongly debited. When you do repair to your building, building will not increase, but you wrongly increase the building account. So now you'd have to decrease, so you're crediting it. Next thing, when you do repairs to building, it's an expenditure, repairs expenditure. By mistake, instead of writing repairs, you written building. So repairs was supposed to be debited, not debited. Repairs was supposed to be debited, not debited. So what do we do now? Debit now. So what exactly should I be doing? I should be doing repairs account debit. Repairs account debit. But here, my friends, the rectification is in stage 3. So whenever we're doing rectification in stage 3, can I debit an expense? No, I cannot be debiting an expense. So instead of writing an expense, that is repairs, what would I be writing? I would be writing P&L adjustment account. So I would have to be writing P&L adjustment account, and instead of writing P&L adjustment account by mistake, instead of writing P&L adjustment account, instead of writing, instead of writing repairs account, I'm writing P&L adjustment account. P&L, I think ADJ will be sufficient, right? Adjustment account. But actually, if it was not stage 3, I would have been writing repairs account. You make this italic. Whatever is there within the bracket, you need not write it in the answer. You got that? So repairs was supposed to be debited, not debited. So debit now. Building was not supposed to be debited, wrongly debited. So we credit now. If you want the right entry, wrong entry, reversal of wrong entry, I'll tell it to you. The wrong entry, what they've done is building account debit to cash account. So reversal will be cash to building. The correct entry is repairs to cash. So when you take the reversal of the wrong entry, that is cash to building, and the correct entry, repairs to cash, cash will get nullified. The ultimate rectification entry is repairs account debit to building account. So the rectification entry is repairs to building. However, I'm replacing repairs account with P&L adjustment account. So that is the entry. How much is the amount? 12,500. Yes, you can write the same old narration, whatever is there in that question. What is there here? Being repairs wrongly debited to buildings, now rectified. It was wrongly debited to which account? Building account. Now it is rectified. So that's it. So this is the journal entry followed by the narration. Narration is to be written in the examination unless and until they specifically tell no need of narration. So in this question, they have not told no need of narration. Bol ke have they given? No, they have not told. You would have to write narration. Yeah. Okay. Would you get special extra marks for narration? No. But can you lose marks for narration? Yes, you can lose marks because you didn't write narration. They've not given the date, so I'm just leaving it so. If they've given the date of identification of the error, I would have written that date. Come on, let us go to next one. The addition of the freight column in the purchase journal was short by 1,500. So freight was recorded less by 1,500. Assume freight is 10,000 rupees. You recorded it 1,500 rupees less, meaning you recorded at 8,500. So freight expense is 10,000. It is recorded at 8,500. So how did you get 10,000? Example. Yeah. Or whatever it is recorded 1,500 less short. So what should we do? We should increase our freight expense by 1,500. Freight is an expense. In order to increase it, I would have to debit it. So freight account will be debited. Freight account will be debited. Yeah, but freight is an expense. Freight is an expense. Expense cannot be debited in rectification at stage 3. So what will it be replaced with? P and L adjustment account. So it has to be debited with P and L adjustment account. Yes, freight account has to be debited, meaning here in this case, what exactly is it? This P&L adjustment account, which will be replacing our freight account. This has to be debited. What will be the credit? They have not told anything, meaning rest is fine when it comes to the credit aspect. So they had missed out on only that part. So that will go to suspense. It's a one-sided error. So the journal entry will be P&L adjustment account debit to suspense account. What will be the amount? Amount in this case is 1,500. Am I right? Yes, 1,500 rupees. How exactly is the first one different from the second one? First one was a two-sided error. So we don't have suspense account. Second error is a one-sided error. So we have suspense account. Freight recorded 1,500 short. Now being adjusted or rectified. Now being rectified. It is now being rectified. Okay. Okay, let's go to the next one. So we're done with 2. Now we're doing 3. Goods to the value of rupees 1,050 returned by customer Rani and Company has been posted to the debit of Rani and Company and also to sales returns. What have we done? So you had goods to the value of 1,050 were returned by customer. When the goods were received back from the customer, the journal entry that you should have written was sales return account debit to Rani and Company. What should you write? Sales return to Rani. Sales return should be debited. Rani and Company should be credited. What have we done? Rani and Company has been wrongly debited. So you should write sales return to Rani. Rani was supposed to be credited. Instead of crediting, you debited Rani. Does that mean sales return is not recorded? No. They further told, and also sales return means sales return is also debited. Rani and Company is also debited. I repeat, the correct journal entry should have been sales return account debit to Rani and Company account. Sales return account debit to Rani and Company. This is the correct entry. What did they do? Sales return they debited. No problem. Rani and Company, which was supposed to be credited, has been wrongly debited. So Rani and Company, which was supposed to be credited, what was it supposed to be? It was supposed to be credited. Have they credited it? No, they've debited it. So what will I do? Rani and Company. I'll credit it now. Yeah. Firstly, it was supposed to be credited, not credited. So I should credit how much? 1,050. 1,050. Secondly, it was wrongly debited. In order to decrease that wrong debit, I would have to additionally credit by 1,050. So it should be 1,050 plus 1,050. Yeah, you heard me right. It should be 2,100. 2,100. You get that? What will be the debit be given to? This is a one-sided error, friend. So the debit will be given to suspense account. The debit will be given to suspense account. So the journal entry for rectifying this error is suspense account debit to Rani and Company account, but the amount is 2,100. Many of you might be still wondering, sir, why is it not 1,050? Why is it 2,100? I'll repeat, Rani and Company account was supposed to be credited by 1,050. What did it do? They wrongly debited it. So firstly, the correct credit which was not recorded, for that we credit by 1,050. Secondly, to reduce the wrong debit, we credit again by 1,050. It is like this. I was supposed to go right side 2 kilometers. How many kilometers? Right side 2 kilometers. Instead of going right side 2 kilometers, I went left side 2 kilometers. After I went 2 kilometers on the left, now I've realized I've gone wrong. So how many kilometers should I go on the right? 2 kilometers? No, 4. If I go 2 kilometers right, I'll come back to my original position. If I go 4 kilometers, then I'll go to the right place. You would have to double it because Firstly, you went on the wrong direction. Secondly, you didn't go on the right direction. So you'd have to do the double of the mistake that you did previously. You get what I'm trying to tell? Yes. If you are supposed to add 1000, by mistake you subtracted 1000. Now you'd have to add 2000 to make it fine. Correct. So that's the case with respect to this one. So what is this? This is being error in Rani company account now rectified. Yeah, this narration would do. This is what you would have to do as narration. Okay, don't forget, don't skip narration. It is important. Yeah, you might be wondering, why did I not change Rani and company with P&L adjustment? P&L adjustment will be used only in the place of those ledger accounts which affect profit or loss. That is nominal accounts. Rani and company account is a personal account. That would remain. We would not replace Rani and company with P&L adjustment. If it was purchase or sales in that place, I would have replaced it. Let us go to next one. Fourth one. Sundry items of furniture sold for rupees 30,000 had been entered in the sales book. Ayyo. The total of which had been posted to sales account. So sales has been wrongly recorded. You have credited sales, but is it sales? It is not sales. So what should we do? We should debit sales account. I told you sales is wrongly credited. So what should be credited in place of sales? Actually, furniture. What should be credited? Furniture. I repeat, sales was wrongly credited in the place of furniture. Sales was wrongly credited in the place of furniture. So sales was wrongly credited. So we debited. Furniture was supposed to be credited, but not credited. So we credited. So the rectification entry will be sales account debit to furniture account. If you're wondering and waiting for wrong entry, right entry, I will tell it to you. The correct entry here was cash account debit to furniture or bank account debit to furniture. Cash is coming in, furniture is going out. So the correct entry should be cash to furniture. What did they write? Cash to sales. So cash was supposed to be debited, cash is debited, no problem. Furniture was supposed to be credited, instead sales was credited. Furniture was supposed to be credited, instead sales was credited. Sales was wrongly credited, so debited. Furniture was not credited, so credit now. So the journal entry will be sales account debit. Sales account debit to furniture account. But can you use sales account in here? Is the question. You can't use sales account here. Why? Because this is rectification at stage 3. Whenever we do rectification at stage 3, what do we use? In the place of sales, we'll be using P&L adjustment account. Hanga, sir? Hangene. Sir, are you sure? Very much. I missed it. Perfect. P&L adjustment to sales. Okay. What is the narration? Being sale of furniture wrongly recorded in sales account. Sales book now rectified. Yeah. Tada. What's the amount? Amount is 30,000. Okay. Now, come on. Let's go to the next one. So we're done with this. The last one is that we have. So the last one is with regard to which one? Bills of exchange received from Raja and Company 20,000 had been returned by bank as dishonored. Okay. Had been credited to the bank and debited to bills receivable. Very good. So when basically a bills receivable is received back from the banker, the journal entry will be bills receivable to bank. Bills is being received back and we would have to pay money to the bank. I repeat, When a bills receivable is received back from the bank, the bill is coming back, bills receivable account should be debited, correct? Bank account should be credited because you need to pay money to banker, correct? What have they done? Has been credited to bank, debited to bills receivable, perfectly written, no? What is the error here? The error is the extension entry. Once you receive that bill back from you would have to give it to that person who gave you the bill. Am I right? Yes or no? Because you're supposed to receive money from that guy. You would have to give money to the debtor. So in order to do that, you would have to give the bill to him and then his value will increase. Same bill what the banker gave you, you're passing it to him. So bills receivable is going out. So bills receivable account should be credited and sundry debtors account should be debited. So the journal entry what they've written is bills receivable to bank. That is a bill received from the bank and money paid to bank. What they've not written is bill passed on to the debtor. The journal entry for which is sundry debtor account debit to bills receivable account. The debtor's name here is Raja and Company. So the journal entry that is not entered is Raja and Company account debit to bills receivable account. You get that? So that is not written. Let me write it now. Raja and Company account. Will I be replacing Raja and Company account with P&L adjustment? The answer is no. Why no? Because Raja and Company is a personal account. It is not a nominal account. To bills receivable account. Should I replace bills receivable account with Raja with P&L adjustment? The answer is no once again. Why? Because bills receivable account is again what? Not a nominal account. Yeah. What is the amount for this transaction? To 20,000. This is in fact an error of omission. One entry is omitted. You have written the entry for receiving the bill from the bank. You didn't write the entry for bill being passed on to debtor. Being bill returned to debtor on dishonor, now recorded. It was not recorded previously. Now it's been recorded. That's it. That's it. Do we have anything else remaining here? No. Now we know that, okay, in this entry, building account will get reflected to building ledger, and then suspense account, it's already created, it will get nullified. In the process of these rectification entries, you have newly created a ledger called P&L adjustment account. This should be closed or transferred to capital account. Let us see how much is the balance. 12,500 debit here, 1,500 debit here, 30,000 debit here. That's it. So total money that will be debited, which should be credited here, and debit should be given to capital account. To P and L adjustment account. What is the balance? This is this 12,500 debit plus this 1,500 debit plus what else we have? 30,000 debit. So these three items I'm adding it up, totally giving me 44,000, which will now get transferred to my capital account. So this was debit previously. Now the entire balance is credited so that my P&L adjustment account will get closed. Capital account. Capital account will be debited. Why? This should not go to our P&L account because it is not our current year profit. Do you get that? That's it. Being P&L adjustment account closed. Closed by transferring the balance to capital account. That's it, guys. I don't know if you like it so far or not, but you have to accept the fact that I'm done. We're done with this question so far. So that's it. So this is question number 5A. How many marks? I think it's 10 marker. 5 marks, 5 marks. Okay. 5 rectifications, 5 marks. Perfect. No problem. 1 mark for each of the journal entry. It's little less. Can't, right? At the end, we'd have to only write. Yeah. Let's go to 5B. 5B is again a 5 marker. Max and Company. This is the one. This is a little interesting one. Yeah, a lot of students found this little tricky. They wouldn't have found any of these type of questions usually in the examination usually. So this is like one part of the adjustment that we usually do in a final accounts chapter or in a chapter of NPO. This has been asked. This basically tests your skills when it comes to computation in relation to our payment concept and accrual concept. So how much is accrued, how much is paid, how much relates to this year, how much is prepaid, and that sort of a concept. Yeah, very interesting one. Let us do this one. Come on, let us do. This is 5B. Question number 5B. You can say little offbeat one in the examination, but easy, very easy to do. Max and Company employs a team of 9 workers who are paid 40,000 per month. Okay. In the each year ending 31st of December 2018. So our year ending is 31st of December 2018. How many employees did we have? 9 workers. What is their salary? 40,000 per month. Okay, perfect. So let us go ahead. So let me write it here. How many workers? 9 workers. So we'll do it in the books of Max and Company. First and foremost thing. In the books of Max and Company, very important. How many workers are there? Workers, 9 workers. 9 workers. What is their salary? 40,000 per month. 40,000. Okay, I'll write here salary per month. In which year? 2018. 2018. Concentrate on this question's alignment. If not, it will become a little difficult. Okay, what do we have after that? At the start of 2018, that is next year, the company raised the salaries by 10%. Okay. Copy, paste. So we're going for 2019. Which year are we in now? 2019. 2019 how much? 44,000. Very good. Not an issue. Yeah. On 1st of July 2019. Okay. July 2019. What happened? The company had 2 trainees. We have new set of employees now. 2 trainees. Company had 2 trainees at salary of 21,000 per month each. So 2018 maybe we don't know. We're only talking about 2018. How much? 21,000 per month. 21,000 rupees. Perfect. So far we have 9 workers and 2 trainees. 9 workers were getting 40,000 in last year. Now they're getting 44,000. Newly this year, from which month? From July, we've had, from July, isn't it? From 1st of July 2019, we've had 2 trainees. They are getting 21,000 per month salary. Okay, done. Next. The workforce are paid salary on the first working day of every month, 1 month in arrears, meaning January month salary will be paid 1st of February, February month salary will be paid on 1st of March, March salary will be paid on 1st of April. You get that? So the salary that you get in January is for the month of December. So you get the previous month's salary in this month. So this month, now we're in January. In January, if I get salary, if I'm a worker in this Max and Company and if I'm getting salary, this is my December month's salary. And when will I get my January month salary? January month salary, I'll get it in February 1st. On February 1st. You get that? Okay. So that the employees receive their salary for January on the first working day of February. You should be thankful to the institute. They've explained it so beautifully. The language is so beautiful, so clear. Should say ICA, I love you. You should be. See, they could have left you with a lot of ambiguity there. They could have stopped at that point, 1 month in arrears. That's it. They could have stopped there and it could have still made the same sense. But they went an extra mile to help you people understand the question better so that you can get the answers more correct, so that you'll get more marks, so that you'll get better job, so that you'll earn more money, so that you can have an extra kid, go on extra vacation, live life little extra than ordinary, extraordinary life. So ICI is amazing. Okay, jokes apart, come on, let's go ahead. You are required to calculate amount of salaries which would be charged to the P&L account for the year ended 31st of December 2019. So how much is the expense? Let us do one thing at a time. Okay. Period of employment. months. Period of employment in months. How many months did these people work? Period of employment in works. These people work for 12 months. Okay. How about these guys? These people work for from July 31st December only. They work from 1st of July to 31st of December. How many months is that? July, August, September, October, November, December. 5 in the head, 1 in the hand. After 5, 1, 6. 6 months. So first point, expense for the year. (2019). How much is the expense for the year to be written in P&L account? 44,000 multiplied by 2018. For this year, they work for 12 months and each month's salary is 44,000. So I would have to do 44,000 multiplied by 12. What is it? 44,000 per month multiplied by 12 months. Does that make sense? Please let it make sense to you people. Next, how about here? Here it would be simple. How many months did they work? 6 months. How much is per month salary? 21,000. So 21,000 multiplied by 6 months. So what exactly is that? It is 21,000 per month for 6 months. That's it, boss. We're done with A. What is that they had asked? 1. Okay, 1, 1, 1. They had asked no expense for the year or amount to be debited to P&L account. Amount to be debited to P&L account. Yeah. Let us go to the second one. What have they asked after this? What they've asked after this is amount actually paid as salaries. Amount which they would not pay 5,28,000 during the current year. Why? See, 5,28,000 is 44,000 per month into 12 months. But what you need to understand is in this year, last month, December month's salary will be paid January. So what we paid this year is last year December salary till this year November salary. Last year 2018 December salary is paid in January 2019 and December 2019 salary is paid in January 2020. So what is paid here is December 18 salary. December 18 salary is how much? They would have paid December 18 salary, which is technically how much rupees? 40,000 rupees. Done. And after that, what would they pay? January 18 to November 18. January 18 to November 18. How much is that? Wait, I'll make this more nice. So December 18 salary is paid. Next, they are paid January 19. Oh God. January 19 to November 19. Sir, you might say, sir, why not? Why not December 2019 salary? December 2019 salary is to be paid in January. I hope you got this. Yeah. How much is that? This is basically 44,000 per month multiplied by 11 months. How much would you get that? That would basically be 44,000 multiplied by 11. You would get 4,84,000. So how much is the amount paid as salaries for 9 workers? This is for 1 worker we've done. We need to multiply this by 9 people. You get what I'm trying to tell? So this is for 1 worker, 1 worker. So I will do is equal to 4,84 multiplied by 9. So I would get 4 crore 71 lakh, no, 47 lakh 16,000 rupees. That is the amount of salary paid. Okay, if you want, I'll put this little below. For the month per worker. Salary per worker. I hope this helps now. Yes, I've added this and then multiplied it by into 9. Similar thing we would have to do for trainees. But trainees ke liye it is not so complicated. Why? It is like basically July month it's paid in August. August it's paid in November. That initial calculation won't come. They work for 6 months, but only 5 months ka will pay now. 6th month it will be paid later. So it would basically become, what do you say, July 19 to November 19. Why not December 19? December 19 ka it will be paid next year. January, May next year it will be paid. How much is it? 21,000. I hope this helps. So how much is the expense? It is basically 21,000 multiplied by 5 months. Yeah, 1,05,000. 6 months he worked, 5 months is received now, 1 month I'll receive later. So this is amount paid as salary. Next, last one, amount due. So what have they asked? Outstanding salaries. Outstanding salaries as on as on 31st December 2019. Okay, how much is it? It is just that 1 month salary. What is that 1 month salary? It is like December 2019 salary. Yeah, how much is the amount? Amount is 44,000. 44,000. 44,000 per worker. So I would do 44,000 multiplied by 9 workers. That would come to 3,96,000. How about trainees? It is December 2019. How much is it? 21,000 per trainee. Okay. 21,000 multiplied by how many people? 2 people. 1 month. That's it, guys. We're done with the answer. So these are the answers. For item number 3, this is the answer. For the third question, this is the answer. For the second question, this is the answer. For the first question, these are the amounts. You get that? So whatever is the answers, I'll mark it in bold so that you get to see. whatever is marked in bold is the answers. Yeah. So this is the table that I drew to help you understand the answer. Let me drop the border for you to understand better. Yes, the borders have been drawn up so that you guys can actually make it can start making sense to you a little more clearly. So this is 5B. Now I think I should take you to sixth question. Or do you have 5C? Yeah, both of them were 5 markers. We do have 5C. Yeah. Let us do 5C. 5C following are the manufacturing account, creditors account, trading account provided by Mr. Shivram related to financial year 2019-20. There are certain figures missing from these accounts. Yes, we would have to close them. Yeah, there are few items missing. So what they've given to us is raw material account, creditors account, manufacturing account. Yes, come on, let us do this. Raw material account, creditors account, manufacturing account. Question number 5C. In whose books are we doing this? In the books of Messer Shivam. In the books of Messrs. Shivam. Particulars, inner column, outer column, particulars, inner column, outer column. So I'll drop the formats that I need. Particulars, inner column, outer column. So we got what we need. I'll copy this. My debit side is done. So happens to be my credit side. So this is one ledger, that is raw materials account. So we'd have to further drop ledgers, that is creditors account as well.